Welcome to another episode of Money Matters. My name is Nev, and I am beyond excited that you are here. We are, of course, broadcasting live every morning at 7 a.m. Eastern Standard Time, only on onedealaway.com. And today I am beyond excited. I have quite a bit of news to share with you, to showcase, to cover what is going on in the world. The stock markets are behaving all kinds of erratically, and there's a reason for that. We're also going to be covering what's going on in the world of crypto, of course, because that too is money, in my humble opinion. We're going to look into what's happening with the technology and 5G. And are China and United States going to be friends again or not so much? So we have all kinds of things to cover, including for those of you who are expecting to retire at some point and you are relying on pension funds, we're going to be covering what's going on in that world as well. And we're going to be uncovering sort of what are the things that you should be looking when it comes to these crazy markets and how to analyze them. So we got a full show of things to cover. So get ready and let's get to it. All right. So, got that little bit short. I was excited to go over and cover some stuff with you. So, here is obviously, this is the first article. And what we've been seeing, obviously, we had the dip on Thursday, big one. Friday wasn't all that pretty. Monday, we opened a low, right? And then something interesting happened. The Fed announced the same thing that they announced again, saying, we're going to go out, we're going to be buying the corporate debt, which they said before in March, but now they said it again. And the market, well, the market went up. And if you actually take a look at it, let's take a look over here at S&P future. Hold on, it's coming. You can see, look at this, up. I mean, gap up, not just up, gap up. And let's take a look at a 5 day, right? So this was the Thursday, big old dump thing, sort of kind of started to go and then went down, went sideways. And you can see Monday when we opened, it sort of went down. And then, they announced it. And I mean, this puppy went up. So I don't know exactly what the stock market is going to do today. Let's be honest. Because as I always say, my crystal ball broke years ago, but I do expect that people will be trading the news. The fact that they have gone in and announced the stuff, everybody's like, yeah, they're going to be backstop and everything, which they are. Let's be honest about what's going on. And they're not going to allow for the market to drop, which could be bad thing, could be good thing. It just depends on how you look at it. So it will definitely be interesting to kind of see what happens and how long they can sustain it. There are some theories that say that, you can keep on printing money, you can keep on giving it to people, you can keep on boosting the markets. They're going to go up and everything is going to be great. And we're going to get ourselves sort of bootstrap ourselves back on up, right? But there are some other areas that are also talking about that, this works short term, works right now, but it creates sort of bubbles, and it creates bubbles in equities, in markets, in assets, where people are kind of jumping in, buying, trying to basically make the yield happen. And long term, this could have very negative consequences. So we'll see. I based off of what I'm seeing, again, not a financial advice, just one random guy on Money Matters named Nev that broadcasts live on onedealaway.com sort of thinking is that because of the super low interest rates, because of all of the money printing, because of all of the backstops and stuff, I actually expect that the asset prices will, you know, long term, midterm, let's call it midterm, continue to rise. And it's going to be a very interesting piece to watch. It might add badly, but we won't know it until a few years ahead. And I guess at that moment, we'll deal with it. But for now, party on. So that's kind of where we are. Now, I do want to welcome everybody who is watching this live on onedealaway.com. Thank you very much for joining. We'll be entering the chat and hanging out after the news, after the broadcast. And for those of you who cannot watch this live, who are watching this on YouTube, thank you very much. Make sure you do subscribe. Do hit the like button, and if you want to hit the bell as well, so you get notified every time things pop up. That will work as well. I think it will serve you well, and especially if you like the show. If you don't, then don't do it. But if you do, please do hit it up. So basically what's happened is that they're basically saying that, hey, we had the stock futures kicked off the overnight session after Monday evening, extending gains from the regular trading day. So we are going back on up, y'all, back on up. However, I don't know how long this is going to go. And again, I think we're going to be seeing this where the market sort of dips down, the Fed steps up, does some sort of press release. They, do or don't buy something because it appears that them just announcing that they might do something actually gets everybody excited and everybody jumps back in. So that's one of those interesting pieces to kind of watch for and look at. And yesterday we covered a bit of sad news. In my condolences to the family that lost the young man. But there is another sort of warning, right? All of these things are coming as warning, and there's another warning coming out of a millionaire, billionaire. I don't know. This is billionaire. Well, there you go. It says it right here, Nav. All right. I guess I need to drink more coffee. Hold on. So, billionaire Cooperman. Bill and Leon Cooperman on Monday said that the emergence of individual investors eagerly scooping up stocks that have been rocked amidst the coronavirus-induced downturn will ultimately not end well for those individual investors. Robinhood markets are going to end in tears, said Cooperman during the CNBC show The Halftime Report on Monday. Now, here's a bit of an interesting piece, just in case you wanted to know. Robinhood has added more than 3 million accounts this year and now has over 13 million with a median age of 31. All right, we're going to put a pause in this because I don't know who's watching. And, I'm going to assume you're not like a professional trader, although if you are, cool, drop me a line. Let me know. And as people say, give me a tip. The best tip that I can give you, it's actually interesting, and I promise to answer the whole bit. But the interesting thing, this was clearly pre-corona when we could travel and live conferences were happening. And I attended this conference. It was about 4,000 people. And so I was spending some time. It was an entrepreneurship conference. So it wasn't money related. It was just sort of business related. And so many people were trying to figure out, how do I start my business? How do I expand my business and that kind of stuff. And so we're talking, and there was a group of 10, 15 of us just chatting. And, they said, well, what do you do? Right? Because everybody does that at these conferences. Everybody's like, what do you do? What do you do? What do you do? So people said, what do you do? And I explained that, at that moment, it wasn't necessarily that I was starting to work on the tech stuff. So I said, I work basically in education. I have an online school, sort of for individuals who want to improve their money, want to improve their investing, want to improve their businesses when it comes to from financial sort of side of things. And it's really the education that is akin to sort of getting an MBA, but without all of the theoretical stuff. It's most like hands-on. So they were like, oh, cool. So they were like, oh, is it stocks? I'm like, well, we do talk about stocks and bonds, of course, but we focus mostly on physical assets, on assets you can control. We do go into cryptocurrencies and right. And so they were like, oh, can you give me a hot tip? And I'm like, sure. And I actually paused for a second. I'm like, what? And I said, sure. And here is the hot tip. Actually, I'll give you two, not just one. Give you one that you asked for, and I'll give you a bonus because I like to always give more than people ask for. So they said, okay, great. And I said, get a pen and paper. So they get a pen and paper. I said, all right, you ready to write it down? I said, yes, I'm ready to write it down. I'm like, all right, tip number one. I'm like, tip number one. Okay. And I'm like, but I need you to write it down. So they said, okay, fair. I said, tip number one, don't ever ask anybody for a tip. They started to write it down, and they looked at me. They were like, what? I'm like, that's tip number one. You need to write it down. Don't ever ask anybody for a tip. And tip number two, educate yourself so that you don't have to ask for a tip. Uh, Clearly, that's not what they were expecting. That's not what they were hoping for. But that is the best tip that I can give you. That is the hottest tip that I can give you that I gave them. Now, let's talk about the whole median age of 31. That basically means that half of people, right, below 31 are, well, below 31. And then the other side is above 31. So it's a pretty young market, is basically what that means. And this is a part that is kind of interesting because we're getting a lot of very, very, very young individuals who are jumping in it and trying to trade. And of course, sometimes they're successful, sometimes they're not. And, in this crazy market, it's a bit scary. A number of recent reports attribute the market's rally since its March 23. Anyways, there's somebody that just put in a comment. You can see it. This is live. I'm telling you, this is all live. It's all happening. So basically, it's saying that, what we're seeing this choppy trading, kind of what's gone in, is that new market participants have jumped in. Now, on Monday, Cooperman um, pointed to purchases of bankrupt car rental company Hertz Global, which we've been talking about. We've been talking about here, which has drawn feverish buying interest from bargain hunting investors, even though the economy bankruptcy means that there is little, if any, equity value in the enterprise. And we've talked about this as well. When you buy something that is bankrupt, there might not be a whole lot of value. So you might be buying a worthless paper and trading it. And we're getting back into the whole like greater fool theory. And if you've never heard of greater fool theory, which I'm sure you have, but if you haven't, just in case, because again, I don't know who's watching, greater fool theory basically says that the only way that you can make money is to find a greater fool than you to buy it at an even higher price. That's what the greater fool theory is. And it worked while it didn't in early 2000s. It worked while it didn't during the dot-com bust. And it's working now until it doesn't. So anyways, what he's saying is that the mom and pop investors have outperformed pros like Cooperman and the other mutual funds. Of course, they have thus far. But what he's saying is that from my experience, this kind of stuff will end in tears. So it just comes as a warning for people, not necessarily saying don't go into it. But I think to me, what it says is spend a little bit of time learning, educate yourself, watch Money Matters, watch some of the channels, go out there and start learning. And again, don't just take a tip of like, oh, the Hertz is the best place to buy. That doesn't make sense, right? Like do your own research. But if you don't know how to do that, then spend a little bit of time, maybe even a little bit of money to educate yourself how to do that stuff. Okay. The last thing you want is the hot tip of what to buy, because some of the folks that are sort of influencers, especially if they're peddling in the penny stocks have low volume. They have low liquidity. So it's very easy to move them up and down. And so they front run you. They buy something, then they tell you to buy it. You jump in with the crowd, of course. It lifts it up. They exit out. They made money. They posted that they made money, but there's nobody else coming behind it. So when they exit out, the price drops, or if it's not that small, then it kind of stays flat. You don't want to do that, right? Like that's my big fear, that people are following some of the stuff without necessarily understanding and buying a worthless company, B, buying penny stocks and that kind of stuff where it could be easily manipulated. And then final piece that is also scary is that people look at the price only without realizing the value. So we're like, oh, it's 10 cents. I'm just going to buy, I don't know, 100 of them. Done. Uh, it doesn't, right? Like, don't just focus on the price. There has to be some underlying fundamental pieces. What does this company do? Are they profitable? Do they make anything that anybody wants? How is the financial? What is the earnings per share? Like, there's all these different things. And then, of course, getting into some of the technical stuff, which we're actually going to get in a moment, is also important, especially if you're thinking of trading it long term. And you need to understand both technical and fundamental pieces, because having just one doesn't make sense, in my humble opinion. Obviously, you can do whatever you want, but in my opinion, it just doesn't make sense. Okay, so this is kind of something that we just talked about, but basically, let's just kind of cover, because it has charts and I didn't have charts when I just shared what I shared. Excuse me. Stocks soar into green after Fed announces it will start buying broad portfolio of corporate bonds. And you can kind of see it, right? It went down, up, down, up, downish, up, went down, back up. So it's by the rumor, by the news, by the press release, without actual about actual buying, and now by another press release. And it's basically saying that, hey, we are basically saying that we are going to go up after basically Fed promised to back every credit company in America and zombify entire economy. And so it's basically saying that, hey, we're going to be buying stuff, and they're peddling basically the same stuff they've always been saying, but now, obviously it works, and they're going to keep on working it as long as it's working. So I promised to kind of go into some of the technical stuff, so let's go and do that piece. Ready? There we go. So the stock market is tracing an important reversal pattern that you should watch. And so this is an interesting one. It's going to be a bit more technical, but I think we'll be able to get to it. So they're saying that there's an important technical pattern in the stock market called an island reversal. So you want to write this down, then you want to spend a few moments reading about it, researching it online so that you can understand, and then finding it on a chart so that you can see if you can spot it. Now, this one is ominous. But it's offsetting this negativity is the Federal Reserve full tilt stimulus. So what they're saying is that looking at the analysis on its own would basically be saying this puppy is going down. However, the Federal Reserve kind of coming in constantly is potentially reversing it or pausing it, and it's creating, in my humble opinion, again, a whole lot more uncertainty. So what they basically gave us is the Dow Jones chart, and we're going to take a look into it in a moment. But let's read first, and then we're going to take a look. And it's basically an annotated chart of Dow Jones Industrial Average, which tracks the Dow Jones Industrial Average, right? So it's ETF that tracks the index. The chart shows that an island was formed by two gaps, one on the left and one on the right. All right, so let's take a look. So you can see, okay, here we go. So here's the island, right? And I'm not going to move my mouse because it keeps moving it around every time you go in. And you will see that there's a gap on the left. There's a gap on the right, kind of creating the island, okay? So you can kind of see that the island and what's going on. Pay attention to the green on the left. Then you have this almost like a plus sign, right? That is sort of the third inside the island. Then it goes red. Then we have a gap, right? And then it goes back down. So that's kind of what the island is. So let's read a little bit more about it. Now, an Aurora sentiment indicator was giving sell signals throughout the formation of the island. When sentiment becomes extremely positive, it is a sell signal. Some publicly available indicators work well, what others do not. We have found that publicly available sentiment indicators do not work well, hence the need for proprietary indicators. The chart shows on the last 2 days of the island, the smart money professionals were selling. That's the red stuff that we're talking about. An inside day occurred the day after the island reversal. During this inside day, the candle is red. So let's take a look at what they're saying, right? So you can see it right here, right? So you can see smart money selling, that's the red. Then you have another gap, and then the inside day is also red. Cool. Makes sense. The stock market is opening up lower after the inside day. If the inside day did not occur, it would have been nullified the negative implication. Volume was very high on the day when the gap was formed on the right side of the chart. This adds to negative potency of the pattern. Okay, so you can see that the volume, you see volume right here. So I'm going to actually zoom out so you can take a look at the volume. So find the volume, it's all the way on the right. You can see the pattern, right? You can see the island, and you see that basically as sort of the pattern is ending, the volume is up, right? Okay. So while the island, oh, sorry, I skipped it. Right here. The chart shows that RSI, relative strength index, reached 95 when the island was being formed. So let's take a look at RSI, right? 95. So this is basically extremely broad. And what RSI does, it basically measures whether something is overbought or underbought or oversold, I guess would be the opposite. And so it kind of measures of what's going on based off of the different indicators within it. And so typically people will say, the technical analysis will say that if it's, if it hits kind of 30 or below, it's oversold, right? So it has the potential to go up. If it's 70 or above, that it's overbought, so it has the potential of going down. And, when it reaches like 95, then it's saying that this is extremely overbought. So the potential and probability of it going up is going down is really high. So you can kind of see right here as we zoom in, you can kind of see it a little bit better. Yeah. All right. So while the island was being formed and prior to the stock market falling, RSI gave signal when it crossed below the moving average shown on the chart. Below the volume on the chart is the S&P 500. Okay, pattern, the S&P 500 looks the same as Dow Jones Industrial. So below, I think that this is the S&P 500. So right here, so right underneath the volume, take a look at this one. I know it's like super tiny, and I can't zoom it in. I tried, but you can see. So you see the Dow Jones on top, RSI volume, and then it's right here. You can see where it says SPY. Hold on. See this right after the volume and the average. Okay, so you can see that stuff, and it's saying that the same thing is applying there, and so that's important as an investor, or I would actually call it a trader, not necessarily investor, because if you're buying and selling, that's short term, that's trading, and potentially speculating as well, in my book. But basically saying that if it applies for one, you got to apply it to something different. And if it holds, more likely than not, it's true. Now, what it's saying is that it's not necessarily characterized and happening inside the travel stocks. So what they're saying is that the same pattern does not apply on the travel stocks. So like American Airlines, Carnival Cruise, that kind of stuff. Now, they're saying that the investors have been hiding in the 5 biggest stocks. Pattern in these stocks are nowhere near as ominous as the Dow Jones. And many investors go wrong with technical analysis. It takes years to get good at it. And it's not just the island reversal pattern, but also the following important. So I want to pause over here to sort of say that it takes a long while to get very good at becoming a day trader. Now, I know everybody's jumping in and saying, oh, this is super easy and I'm making money and all of this is great. And potentially, maybe, yes. But that again, it goes back to potentially being lucky. You can go to casino, you can go and bet. Every so often, you might get lucky, but continue playing. The casino will collect the money back. For me, Wall Street is just another casino, especially these days. I actually call it the Wall Street Casino whenever I talk, because there is a lot of rigging that is happening behind it that you don't even see, you don't even notice, and you just walk out poorer than you entered. Now, I know people are saying go in for long term and then you might be okay. And potentially, yes. But to me, every person that became like a billionaire is, doing that stuff, or even a millionaire is an insider. It just is. It just is. You kind of have to own things. You have to be on the inside in order to win. Everybody else can potentially maintain or more likely lose. But that's just me. Clearly, I am not big on stocks, right? I really am not at the stock market. I do believe in holding equities, but not crazy on the stock market. Anyways, so they're saying that if you want to become a trader, you're going to have to spend quite a bit of time learning how to do that stuff, and during that time, obviously, it's going to cost you time and money, because whether you pay somebody to teach you how to do that stuff, or you end up going into the market and paying the market to teach yourself that stuff, one way or the other, you're going to pay. So it's just a matter of deciding how much you want to pay and to whom. That's the only thing you have to decide. So it's not just the island reversal pattern, it's the size of the gap, location of the island, the day after the island is formed, RSI during the forming, sentiment, height of the island, volume, duration, and many, many more factors. So we can't just basically go in and take a look at this chart and say, okay, I learned something over here, which we did learn something over here, but you can't just go over here and take a look at it and say, all right, I understand it, I'm just going to blindly apply this and then go for it. What they're saying is, you got to be able to read some of the stuff. And the market is still believes that the Fed is providing backstop, which they are in many, many ways. And it is important investors to bring sophistication to their investing trading and consider the following protection band criteria, meaning that you want to actually put some very strict things when you're trading. You want to put in very, very strict things, such as putting in the trail stops, or the limit stops, or whatever your strategy is. But basically, you're watching the whole thing. You decide and understand when is the good time to get in, when is the good time to sort of take the profits and get out, and when does it make sense to put in those stops, so that if it turns on you, meaning you didn't call it correctly, you didn't predict it correctly, that you're at least in some way, shape, or form protected from what may transpire, so that you don't lose everything in the market. So now we're going to switch, since we're talking a little bit about technical analysis. We're going to stay within the technical analysis and sort of analyzing stuff and taking a look at it, but we're going to go from equities into cryptocurrencies. So time to take a look at price analysis for Bitcoin. So we're going to actually take a couple of different ones. They're listing a bunch of them over here. We're not going to cover all of them. But I think Bitcoin makes sense to cover, of course. Bitcoin futures daily trading volume plunged sharply from about $20 billion on June 11th to about $5 billion on June 13th. That's a big drop in volume, right? On June 14th, the top-ranked cryptocurrency on CoinMarketCap declined, but the futures volume picked up. Now, what they're saying is they're suggesting a higher number of bearish trades on market declines and lesser number of bullish trades, right? And remember, bear, bull, okay? Just in case you ever forget, I'm going to keep on reminding you until you get it. While the trading volume fell, open interest on Bitcoin derivatives has risen to about 4 billion for the first time in 3 months. This suggests the long-term players are not liquidating yet. Okay, so they're basically saying, we're not selling this stuff. We don't, while it might go down, we're not seeing like a major going down. So, and this is an interesting chart. I kind of like it because it's showing that like it's a sea of red. There's like a little bit of green over here and stuff, but that's typically going to be smaller currencies, right? Everything big is down. And it's funny that we have stable coins that are down as well, because they're stable coins, right? They don't move much. Anyways, ETH futures contracts have also been creating records. This suggests that institutional investors are diversifying their crypto portfolio and they're increasing positions in other coins, right? So BTC, the failure of the bulls to push the price above 20-day exponential moving average for the past 3 days attracted further selling. And today, Bitcoin broke below the support line of the symmetric triangle. And you can kind of see it here. Let me see if we can zoom in. Can we zoom in? Nope. Nope, not doing it. All right. Maybe we can do this. We can zoom in some. So you can see right here where my plus sign is, you can see the line, right? You can see the line over here, which is sort of staying steady-ish, right? And it's basically, this is the part where they were talking about, and I can't zoom in, but if you really, really pay attention to it, you will see that there's like a candle wick that is just pointing down below this sort of support level of sorts. And while the breakdown was a huge negative, they could not sustain the selling pressure, and the pair turned from around 8,900 and has currently climbed back inside the triangle. And I want to say that the BTC, as a recording of right now, is 93 or so. So there you go. That's kind of what's happening. So they have recovered from it. The ETH broke the ascending below the ascending channel on June 11th. You can actually see it on a few different days. June 11th. No, this is May 11th. This is the 25th, and then we saw it right here again break. So you can see that it's breaking a few different times, but it's coming back time after time. And then finally, we're going to skip all of these because if you want, it's on Cointelegraph. So you want to take a look at it there. I do want to take one interesting one, and that is crypto.com coin. It's an altcoin. It has been starting to kind of pop up left, right, and sideways. Crypto.com coin, CRO. It has been a strong uptrend for the past 3 months. This has helped altcoin become the 10th ranked cryptocurrency in coin market cap. So, and you can see the reason I wanted to point this out, not because I'm gaining anything or losing anything by CRO and telling you about it, is because what I like about it is the nice cup formation piece, that nice U, which typically ends up being a bullish long term. And you can see how it has beautiful accumulation piece, kind of picked up over here, which makes sense that it would consolidate. And I do expect overall to kind of continue to go up. Again, it could be wrong. Not an investing or a trading advice, just saying this is what I am thinking, and I have no clue if I'm wrong. Right, I could be very, very, very grossly wrong. The strong rally from the lows has pushed RSI deep into overbought territory, which you can see over here. We just talked about that stuff, right? Right over here. And then it dipped. And again, I can't zoom in, but you can see kind of what's going on. And currently, the pair is currently correcting. And I don't know if on top they're showing Crow. Neos dash Neos. Nope, it's not showing up here, which is really bizarro, right? If you're gonna write about it, at least show it. It's not there for sure, but nothing is stopping us for taking a look at the stuff. So hold on just a minute. Let me see if I can find the price of the CRO. So we can take a look into it a bit. Hold on just a second. Oh, okay. So it's dropped down to 11th spot right now, but anything could happen. So it's 11 cents right now. So, and you can kind of see what has transpired. So let's just go into 1 month period, and you can kind of see that it has nicely gone back up. All right. So that's another piece that was kind of interesting. Now, since we're on the topic of the cryptocurrencies, you have heard JP Morgan talk about sort of reverse the sort of conversation about Bitcoin. I mean, they called it a scam and, the worst thing on the planet, and that you're a complete idiot for owning it and all of that stuff. And but then they were building their own. Now they're changing, saying Bitcoin likely to survive as a speculative asset. Interesting, right? So what they're saying is that Bitcoin proved itself as a resilient asset, if not a stable or useful currency during March global financial meltdown. The analyst, let's make this bigger. Can we make it bigger? Yeah, we're making this bigger. All right. The analysts who normally cover bonds noted Bitcoin's success is outperforming traditional assets in March on a volatility-adjusted basis. The report also found that liquidity on major Bitcoin exchanges was surprisingly more resilient than that of traditional assets such as equities, gold, U.S. Treasury bond, and foreign exchange. And it's important to remember that liquidity is incredibly important. So what they're basically saying is that cryptocurrencies successfully passed their first stress during this period despite volatile price action, and are saying that there's little evidence that Bitcoin and other served as safe haven, such as digital gold. Rather, its value appears to have been highly correlated with risky assets like equities. This all likely points to the continued survival of the asset class, but likely still more as a vehicle for speculation than a medium of exchange and store of value. So they're sort of starting to come back around. They're still not calling it a store of value, but they are definitely calling it and saying, you know what, this puppy has been performing really well. We can't say, and the stress test of the first crash, it's done pretty well, right? Like it sort of was correlated to begin with when everything went down, but then it recovered much faster than anything else. All right, quickly going to cover what's happening with Huawei and the United States. And as you can see, Huawei is overtaking Samsung as a top global smartphone maker. So they're starting to basically take over. And as you know, that they have been doing quite a bit of stuff over with 5G. United States has decided that, you know what, we don't trust these guys over here. They basically have been doing all kinds of stuff. Obviously, the whole trade war with China and the listing and the whole 9 yards. But we have news. Apparently, there's change in hearts. And it says U.S. Commerce Department amends Huawei ban to allow for development of 5G standards. The United States Department of Commerce today issued a change to its sweeping Huawei ban. And they're saying that the change is designed to allow Huawei and U.S. to both play a role in hashing out the parameters for the next generation wireless technology. The United States will not cede leadership in global innovation. This action recognizes the importance of harnessing American ingenuity to advance and protect our economic and national security. So they're basically sort of reversing the statement with it and saying, you know what, we're going to play along with this company for now because Huawei has, I want to say, over 3,000 patents that they have received in 5G technology. Correct me if I'm wrong, please, in the chat or the comments on YouTube if you're not watching live. Uh, and so, it almost makes sense that they would do that. Okay. So I did promise that we're going to take a look at what's going on with your retirement fund. And CalPERS is the California basically pension fund that is designed to pay the retired teachers, firefighters, police officers, and public servants, and that kind of stuff. And they have been struggling financially for a long while. And all of their analysis of how they were going to be able to pay people who are supposed to receive this stuff, who pay into it, because as you work, you're paying into it consistently. Then when you retire, it's supposed to pay you back. But they have been evaluating that they're going to have this on the 8% return target. Now, they lowered it down to 7, and they're deciding we're just going to leverage in order to receive this stuff. So the 395 billion California public pension giant is reportedly set to take on substantial leverage via borrowing and financial instruments such as equity futures. The FT reports noting that the leverage could be as high as 20% of the value of the fund, or nearly $80 billion based on the current assets. The purpose of all this extra debt is to juice up returns of CalPERS and help it achieve its growth target. Now, when you go in and get leverage, okay, you obviously have an ability to improve on if the assets go up, but it also induces risk, much higher risk, because if it turns down, twice or 5 times or X, whatever your leverage is, you can actually go that many X's up or X's down, which creates much larger risk factor. CalPERS' decision was almost certainly predicated by Fed's explicit backstop of debt, with the central bank now purchasing both IG and junk ETF as soon as and soon set to buy corporate bonds outright, which they just announced they're doing. So it basically limiting CalPERS' view the downside risk on this leverage plan. Given the current low yield and low growth environment, there are only a few asset classes with a long-term expected return clearing the 7% hurdle. Leverage will increase the volatility of returns, but CalPERS' long-term horizon should enable us to tolerate this. to make sure that it not only does not achieve its 7% bogey, but suffers massive losses in the next financial crisis, the pension giant is now levering up with stocks not too far from all-time highs and with bond yields once again near all-time lows, a combination which ensures that California's pensioners will not only have the fully funded pensions, but will suffer major losses on their current life savings. The FT reminds that the CalPERS assets representing just 71% of what it needed to pay future benefits. Basically saying they don't have enough money to pay everybody that they're supposed to pay. And what do we know about our population? It's aging. We have more elderly than we have young. And with the job losses going away, money's not coming in. You guys do the math, right? The stock market slide this year has increased the long-term structural problems across the United U.S. public pension system. The problem is that applying 20% leverage to juice and also added downside risk. So, something to pay attention to if you are ever planning on retiring, especially if you're close to the retirement. So there you go. We've covered quite a bit of stuff. We've gone over some of the technical components, what's going on, why the markets returned, why they're reversing their positions, why some of the technical stuff no longer is working, and sort of the warnings that are coming out of individuals is kind of what we can expect to happen. And to end something on a funny bit before we end today's show, I have news reports from Russia, and Russian hotels are required to report something. Now, I would love for you to guess. So go ahead and, if you're not watching this live, if you're watching this live, put it in the comments right now. What do you think that they're required to report? And if you're not watching this live, do me a favor, pause the video, put it in, let me know what you think they're requiring. And in 3, 2, 1. Here we go. If you like it, put a ring on it. Russian hotels now required to report if unmarried couples share a room. There you go. So if you're unmarried and you decide to visit Russia, which is actually still closed to the visitors right now due to the virus, uh, you're going to be reported to the government officials, it sounds like it, for sharing a room. So there you go. That's an interesting one for me. It made me chuckle. It definitely put a smile on my face. So I figured, we get a lot of bad news these days. So let's get something that is a bit funny. Look, y'all, thank you for watching. I really appreciate it. Do make sure you subscribe. Do make sure you hit the like button on it. Do make sure you come back tomorrow at onedealaway.com to watch this live. And now we're going to actually end this for the YouTube and stay live on the broadcast to chit chat with folks that are watching this live. So until next time, stay forever money blessed. And do remember, you are only one deal away.